Hello, everybody, and welcome to the midweek market update from Smack the Markets for the 25th of March. So the Fed have brought in a huge stimulus plan, the biggest in history, some $2 trillion plus of stimulus into the US economy to, save the US economy and save the financial system as well. Is it enough? And are we going to be heading to new highs going into the remainder of the week? Well, we've certainly seen a lot of buying activity in US equities over the past 24 hours, and we've certainly seen a change in risk sentiment as well. So very much a risk on sentiment coming through the markets now. Does that mean that this rout and this huge reduction in US equities, well, worldwide equities, is now over? Well, let's have a look at the charts. Let's have a look at how the markets have fared since Monday, and let's have a look at some of the opportunities we discussed on Monday. So if we take a look at the Dow here, first of all, you can see from Monday, probably easier to see here on the 4-hour chart, from over the weekend, the market rallied back up. It sort of started to head back towards 19,000. And if you recall, on Monday, we were looking at 19,000 as being potential resistance here in the markets. The market did find a bit of resistance here, but again, we had stimulus plans coming out from the US pretty much every day this week. So again, on Monday, we had some more stimulus and the expectation that this huge $2 trillion plus stimulus plan was going to be passed has helped the market to continue its move. Now, it's been coming up to some sort of technical levels here. So we've been coming up to the 19,000. Obviously, we took that out. We took out 20,000 here. Now the market sort of pushed just above this 21,100, where the market's also sort of found previous support and resistance in the past. And we're now sort of getting into a zone here in price where we've got a huge trading window. There's not really any structure here to sort of guide pricing, and really we're getting right up here to 23,300 where we've got the next sort of structure point in the market. And of course, because we're in sort of relatively new territory here, there's not a great deal of sort of structure within the markets for price to respect. So at the moment, we've certainly got very much a risk-on sentiment, and we've got a lot of stimulus coming into the markets, and traders and the markets are certainly sort of breathing a sigh of relief with this. However, if we sort of really think about what's sort of going on, there's a lot of stimulus coming into the system, but the actual root cause of what sort of caused this huge sell-off, which is the virus, hasn't really sort of turned the curve on that, and we haven't seen any bottoming of the spread of that, and indeed any sort of peak of infections. And countries are continuing to be locked down, and the effects of that are going to be felt for a long time to come. So is this now a one-way street? Are we going to see the market sort of continue to make new highs? I don't think so. I traded through the 2008, 2009 crash, and I think that there is more testing to the short side here before this actually recovers. So bear market rallies are sort of very common. We're getting a very big bear market rally at the moment because of course we're coming from a place where the markets have sold off so much so quickly. So it's not surprising that we're seeing quite a move to the long side at the moment. So if we come up to these higher time frames, we can start to see, well, where these sort of structures are. And I think looking at the monthly chart, we've got a bit of a structure in here around the sort of 21,500. The market's almost at that sort of price point at the moment. And what I'm looking for here is any evidence of weakness coming into these rallies. This has played out, this sort of technique has played out extremely well over the past few weeks, where the market's rallied up to structure points where we've had those rallies. You short them when they start showing evidence of weakness, and the market sort of moves back down again. Now, at the moment, we're sitting on a very strong rally at the moment. the market's sort of like pushing through structure levels. So again, I'm keeping a very close eye on weakness coming into these markets, because another dose of bad news could easily sort of send these markets tumbling again. So very, very sort of cautious on these markets at this moment in time. Now, if we take a look at gold, we have seen a little bit of normality coming back into gold, although it kind of all came at once. Now, if you remember from Monday, we were looking for the market long above the 15.19 level, or 15 sort of 18, 15.19 level was the level we discussed. And our target areas that we discussed were the if we go back sort of 1550, which was this level here, and 1580, and you can see what's happened. The market's actually blown right the way through that, and we got right up to these highs up here, which is around 1660. So we've had a huge move here in gold as sort of risk sentiment sort of changed, and we started to get a little bit more sort of normality sort of coming back in. Having said that, the gold market now isn't sort of reacting sort of very easily. I expect to see some sort of weakness here. I'm certainly not in this anymore now. So we'll just I'll leave this to sort itself out. We'll see how the liquidity settles down with gold too. We could see continued strength in gold as the sort of coming weeks and months sort of go forward. You know, if we just take a look at this from a higher time frame perspective, we can see that there is potentially sort of much further to go, you know, if the market can break above the highs, the current sort of highs that it's forming at the moment. If we come and take a look at the euro dollar now, now on Monday, what we were looking for and what we were talking about was euro dollar short underneath that 108 level. So the markets had these lovely moves to the short side. Since Monday, we haven't had the plays that we were expecting. We've had that US dollar weakening, which has allowed the euro to move higher here. So price has managed to edge above that 108 level, and that's the big sort of key sort of price point that I'm looking at here. You can see this here on the weekly chart. The market's sort of just edged above there. It's on the back of a big weak move, of course. And of course, if we think that or expect that there's going to be more strength in the US dollar in the weeks to come, then of course, you know, it's unlikely that the weak euro is likely to be able to continue to rally higher. We're hitting a number of resistance levels at the moment anyway, and again, I'm cautious on this. We could see some short-term rallies, and then I'm sort of looking for a longer-term move to the short side again. So at the moment, we're above the 108 level. And I think just looking at price structure here, I think we could be starting to see perhaps a move up here to the 109 area. You can see that the market tried to move there earlier in the week, didn't quite get there. So I think this is sort of almost the easy move now up towards that 109 sort of price point. At each of these sort of decision points, I'm keeping a very close eye on evidence of weakness coming into these markets, because again, at any time, if news flow changes, that could alter sentiment, and these markets could easily sort of roll over. Now, on the same note, if we take a look at new opportunities going into the second half of the week, we're seeing at the moment quite a distinct weakness in the yen, as of course we've got this risk on sentiment coming back in. So some of these yen markets are looking rather interesting at the moment. They're looking at some of the better intraday trends. You can see that here on Kiwi yen is just one of them that again has had quite a big sell-off over the past few weeks. Now we're seeing some sort of recovery here, and the same goes for the Aussie yen and many of these other sort of yen markets. If you take a look at the lower time frames, you can see that we've got sort of fairly well structured trends here on some of these lower time frames, and it's just utilizing the moving average plays, buying turning points within the context of those trends to get sort of positioned. Now, with Kiwi yen, the sort of level that we're looking at the moment is we're looking for this sort of 66.50 area up here to sort of for a sort of a first test. So we're still seeing that we've got a trading window here, plenty of distance to go in the sort of next medium term. We've got good strength in momentum at the moment, and continuing to look for opportunities up towards that sort of decision point. So there's a few markets there that we're keeping a close eye on going into the second half of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.